Hello and welcome to yet another episode of Smart Indian Agriculture on the Federal.com. I am Vivian Fernandez. Have farmer producer companies help smallholder farmers fetch better value for their produce? That is the topic of this discussion. Farmer producer companies got legislative backing in 2002 with an amendment to the Companies Act 1956. There are about 7,400 of them, according to ICRIER, a Delhi-based research agency. The government has a target of setting up 10,000 of them over the next 5 years. Unlike in companies where one share has one vote, in farmer producer companies, one shareholder has one vote, like in cooperatives. But they are better than cooperatives apparently because government representatives cannot sit on their board and veto decisions. So the chances of government interference are apparently minimized in farmer producer companies. Being collectives, FPOs are supposed to bring scale economies to smallholder farmers. They can get volume discounts on inputs, engage agronomic services, and fetch better value for their produce by doing their own marketing. But has this happened, and has it happened at scale? To discuss this, we have with us Mr. Vilas Vishnu Shinde, Chairman and Managing Director of Sahyadri, farmer producer company, which is based in Nashik in Maharashtra. It is one of the best run farmer producer companies, a leading exporter of grapes to Europe and West Asia, as well as one of the largest procurer of tomatoes. Mr. Shinde, thank you very much for joining us on this program, and it is good that you made the time.
Thank you, Vivenji, for this invitation, and good morning to all of the participants and listeners.
Vilasti, Sahyadri is an 11-year-old farmer producer company. It expanded its membership gradually. Before you became an FPO in 2011 January, before that you had about 140 members. You were a grouping of 140 members. So
Right.
over the past 11 years, you have added about 731 members, of which 10 are promoter members. What is the reason that you have expanded your membership so slowly?
First 5 years focus was just to create a great strong ecosystem. That's why we actually focus on the limited number of farmers instead of adding the just the numbers on the list. That is not going to serve purpose. Our if the organization is capable to create ecosystem, then definitely in the next phase, whatever the number we want to add, that is easily possible. So with that strategy, then we decided that in first phase, we'll have 2,000 acres area and around 400 to 500 members as a member of the organization. And we'll focus on creating a sustainable ecosystem for this member. And then in next phase, we'll add new crops and also other farmers from grape.
What is the criteria for giving membership? Because you have a large number of farmers supplying horticultural produce, fruits and vegetables to your organization. In the case of grapes, there are about 1,500 farmers who are supplying grapes. Similarly, in the case of melon, a few hundred. In the case of bananas too. So what is the criterion for giving membership? And do these farmer members contribute their own capital, or does their shareholding come from the bonus they earn by being regular suppliers to the company?
So the criteria for the member is very clear. That the first thing that he should be a hardcore farmer. His own interest in the farming. That is the main one criteria. And then again, he should be from the surrounding area, which will be easily possible to create efficient operation management. So, and instead of one farmer, if from one area, one village, one place, at least 10 to 20 farmers, they should be ready to join with the organization, because operation-wise, also we need to think that the post-service operation and the other operations should be efficient. So that is our first criteria, that the farmer should have one small group in the village, and then we connect them with Sahyadri. So that, and also in the first 10 years period, we decided that we'll have the members only from the Nashik area, from the 4th Tahsil only. And then in next phase, we decided that we'll connect a producer company instead of individual farmer to the main company. So then,
if I can interrupt you, do the farmers, is the one of the criterion for membership the contiguity of the farmers? That is, their land should be contiguous to each other to enable you to be efficient in post-harvest operations.
It need not to be a continuous land, but from one area, from one village.
You buy produce from a large number of villages. Can we say that almost all the farmers in those villages are members of or supply to your producer company?
No. It is a voluntary membership. So every farmer from the some village is a Sahyadri member. That is not a situation. But in our 131 villages, if you see almost 60% to 70% farmers from that village who are growing the grapes, they are shareholder in Sahyadri.
Now, it is not important for a farmer to be a shareholder. A farmer can supply to the producer company without becoming a shareholder.
Right. In the first phase, we are not saying that immediately you need to buy the shares. That is not the criteria. So all the other parameters, whatever the standards we have decided, and we have the global gap certification program. So he has to become the part of the global gap certification program. Then obviously he is following all the protocol standards as per our recommendations. And then in next phase, after 1 year, 2 years his experience, we are offering shares also to him.
What I find about your FPC is that you started by exporting. Normally, we find that farmers, they do not have that kind of an ambition. They like to focus on the domestic market because they think the standards are lower than in the export market. What is the reason that you decided to take a jump and before the FPC was set up, you started exporting to Netherlands, grapes to the Netherlands, where you had some hard knocks. The buyer cheated you. Then you went to England and you find a buyer in UK. And that guy promised you a price guarantee if you supplied quality. So what made you think of exports first?
Basically, before formation of Sahyadri Farmers Producer Company, I did a lot of experiments on individual level, on the farming side and also on the trade side. In 2004, when I started this grape trade activity on individual level from my farm, so during that period, my thought was very clear that if I want to get a better premium, if I want to came out from all the dates and rid of from all the dates situation, I need a better income, better value from the existing my cropping pattern. And that is possible with the connection with the better market. Instead of selling in domestic market, if I try to selling export market, definitely I will get better premium. So the situation, if you see the grapes for last 20 years, domestic market and Europe market, we have almost 100 times better value we are getting for our grapes if we are selling to export market. Obviously, we need to improve our standards accordingly. So that was a trigger to get the better premium. And also before that also, 2004, before that also, there were a lot of farmers and some exporters were doing trade to with the Europe market. So it was not a new thing for us, at least for Nashik farmers. We just start our own journey in that area. So in 2010, when we formed Sahyadri, our focus was very clear that our members, the small farmers, if they expect better income, we need to have a focus on the Europe quality from the beginning itself. So in the first 5 years period, we just,
Yeah, that point is very well made. Now, before setting up the FPC, you exported to Europe and you incurred a loss of about 7 crore rupees. And that is because a government laboratory did not test for a growth regulator. And because of that, that consignment was rejected. And you had bought the grapes from farmers and exported them, and you incurred a loss of 7 crore. But you decided to reimburse all that 7 crore rupees by selling your personal property. Now, you could have very well told them, look here, this is beyond my control. It was the government laboratory that fouled up the whole thing. Now, what was the reason that you reimbursed that loss, and how did it help you in your FPC? Because I think that created a lot of trust among the members, and on that basis, so on that foundation of trust, the FPC was built.
Yeah, actually, when that situation happened, It was not because of the farmer's mistake or not because of the exporter's mistake. It was because of the government agency's mistake. But definitely the loss happens at exporter level, and a lot of exporters, they try to pass it to the farmer, and they just try to run away from the situation. But as a farmer, I was very clear that this situation, if it is not because of farmers, then how we can blame, or how can we just pass on that loss to them? And it was just actually the taste of my values also.
Did that event have any lessons for you? For example, did you decide that you should have more control on what you export and do more of the things yourself than depend on the government?
Yeah, actually, the first thing that as an organization leader driver, so your thought process is very need to be very clear. That lesson I got, and actually, in initial period, I did not realize the benefit of this the decision. But in the next phase, what I actually understand that gave a big confidence to the member, and also the trust built within the members that if Vilas is taking a lead to form such organization, this organization is definitely going to create a big difference and a bigger value for us. So then that confidence and then support of the growers, that helps to build Sahyadri. And one thing also we realize through this situation that we should not depend on government for solving our problems. In agriculture, every farmer is expecting that government should do this and government should support them on this level like that. There are a lot of things. But during that situation, we learned that government is looking most of the agriculture situation in political way. There are multiple issues we saw in the last 10 years, but we handle all the issues on organizations level with our own strength, without any government support. And we could manage the safe situation for our members during crisis also.
We see that the government is trying to push FPOs, and it has set a target of 10,000 to be set up over the next 5 years. Do you think that we should chase targets, or do you think that we should allow FPCs to come up organically so that they can be self-sustaining, so that they can, stand on their own feet?
And definitely, first thing, farmers need to realize that this is the only one solution for them if they want to make farming profitable. Because on individual level, definitely it's very challenging situation. As a small farmer, 2 acre, 3 acre, you could not solve issues on market side, post service side, so on the climate change side, input side. So the collective is your need. It is not a government program. It is not government's any just a subsidy program. That's why you should take a lead. It is your own problem, and that problem you could solve with the strength, and that strength is possible with the collective. So with that mind, if producer companies are formed, definitely there will be a change. With the existing approach that the government's the target program, that 5,000 numbers, 10,000 numbers, we have to achieve this within 5 years. So that will not work. We already have a lot of cooperatives on the paper. In Maharashtra, if you see, we have 25,000 already cooperative societies packs on paper. So if we are just adding a new collective in the name of producer company, it is not going to serve purpose. It is a people's mindset, people's leadership, and also the will, their intention. That is a real difference. Also understanding about their problem.
So Vilas, what I find is I have visited a few FPCs, and I find that they are good at the production function. They bring the farmers together, and they, you try to improve the yields. They try to reduce the cost of the inputs. All that is very fine, but they're not good at the marketing function. This could be also because they do not have the capacity. Maybe they do not have the talent or the knowledge. What is your experience? What would you say about the FPC ecosystem in general?
One thing is very clear now, that farming is no more just a way of life, or it's not our culture, or we are not Annadatta Bali Raja. We are purely an entrepreneur. Whatever the product we are growing, that is for sale. We are expecting that if I am putting 1 rupees for production, I should get at least 2 rupees. And if there is a profit, then only this activity be sustainable. And for that, you need to have control on production, post-service marketing. So if there is no control on the post-service marketing side, and you are just focusing on production, so then it is like a gamble. nobody is giving you assured market. Everybody will try to exploit you. So we need to change that situation, and that mindset, entrepreneur mindset, that is a real game changer. So the producer company
at Sahyadri, have you employed outside talent, and do you pay market salaries to these outside people?
So the basically that mindset is obviously giving this all the views that we need a different expertise. If that expertise is not with me, I can employ people. I can bring the talent in the ecosystem. So this talent requirement, then along with the technology, which is now the one main game changer in every sector, and then the third is the capital. So three factors. If a producer company will focus, how we can bring better and better capital, continuous capital in the system, talent, and technology. Then definitely on the post-service side, marketing side, we can have better solution. As a farmer member, definitely we are exporting the production side. But on post-service and marketing side, with the help of talent and capital technology, we can have control.
Okay, let me come to those points that you mentioned one by one. Capital. Now, when the FPCs cannot borrow from the market, so how do you arrange your capital? Can it depend only on the contribution made by farmers, and also the retained profits?
Yeah, the first option is to create the capital from the members' contribution itself. How they can take maximum shares in the organizations. So at Sahyadri, we took a different approach. Instead of just asking members to put capital from their pocket, we in the first 5 years period, whatever the surplus was created by the organization, and instead of it giving back in the form of cash to the member immediately, we told them that if you will invest that surplus in the company in the form of shares, so definitely that will give you a long-term stability, and this capital will also give better return compared to your farming, because that production organizations post-service and marketing level, whatever the better value will create, so that will get the better return also. So every farmer, the poor farmers, 726 farmers, so they decided to keep that surplus with the organizations in the form of shares. And through that, every year we build 4 to 5 crores capital, and that will continue for 6 years period. So that we give the base for the strong capital base. And then in next phase, the additional members who joined Sahyadri, for them we gave the thought that if you are putting 5 lakh rupees for production of 1 acre grapes, so the 10,000 rupees, if you put in the organization for solving your post-harvest and marketing problems, so it is a logical decision. It is not a big thing. So 10,000 rupees per acre, that we decided to take from every grape farmers, and through that then the further capital base was created. So the paid up capital we made up to 55 crore. Obviously the reserve also we created in the first 5 years period, and then because of the strong our capital base, then obviously bank doors open. We started getting bank limits from the different bank, private and national bank, and also with the competitive rates. So
okay.
Then one by one.
So an FPC can borrow from the banks on its own account.
Yeah, definitely. Yeah. Okay. Bank definitely they can finance to FPC, and but only thing is the interest rate factor. So that the interest rate we can better negotiate if we have our own strength.
Mm-hmm. Now you have a processing unit as well as a retailing unit, and you have demerged them and formed separate companies. What was the reason for that?
So just recently we did restructuring because after 12 years period, now Sahyadri has a certain level. We have now 700 crore plus business. Last year we booked 786 crore business, and we are now targeting to go up to 2,000 crore plus business. For that, further expansion is required, further capital is required. And considering the overall organization's capacity, we decided that whether it is possible to get capital from the market also. And that for that we did the current restructuring. So producer company and it's a 100% subsidiary post-service care company. Within these two companies, we divided the business. That pre-harvest business is with producer company, and post-service business we have shifted to our subsidiary post-service care limited company. And the post-service care company...
And you're going to bring private equity into that
post-service care company is a limited company, 100% owned by producer company. But now in post-service care company, we can raise capital from the private market also. And for the capital market, we are expected to close our first round in the next 2 months period. So that will give additional capital base in the form of equity.
You also spoke of the deployment of technology, and we have a large number of digital agri-tech startups, which have got a lot of venture capital funding. Close to $1 billion, I think, is the capital that these startups have raised. How have you deployed digital technologies in your own organization?
Because of the Europe market connection and early understanding about the consumer expectation, we are very clear about the overall technology adoption in our overall value chain, from the traceability side, from the also the transparency to the members and consumers, also to take the decisions at right time, how we can involve technology. So for that, we took a lot of initiatives on technology front. Digital solutions for the supply chain efficiency, also some solutions on the farm side in the form of sensors. So like that, a lot of technology interventions we did in last 7-8 years periods. And we work with different agri-tech startups in this space. Recently, we have decided to put investment in some agri-tech companies. And currently, we have investment in 4 agri-tech startup companies. And because of all these initiatives, we have complete digitalized ecosystem from our production at the small farm level to the post-service marketing. All these activities are digitalized. Every member's data is digitalized. Every farm data is digitalized. So that is helping us to give better confidence to the consumer side also. So consumer is getting this confidence that all Sahyadri products are traceable. So they can have traceability on food safety side, also on the other parameter sides. And we are certified with almost 22 different food safety and other social audit certificates. So that is giving better and better market opportunities.
So one of the things we have seen in cooperatives is capture by vested interests. If the cooperative is doing very well, then a local politician or a smart enterprising person from within the organization, he captures that cooperative. Now, how do you make sure that in your own cooperative, such a thing does not happen? For example, you are a very charismatic person. You are looked upon by the other members. And gradually what we find is that such people, they tend to have a cult of the personality. And over a period of time, they tend to become undemocratic. How do you make sure that in your organization, decision-making is democratic and even the chairman and managing director is accountable?
So the Sahyadri's membership structure, if you see, we have 726 individual shareholders who are grape growers, and they are all part of Sahyadri from the beginning, and all are selected based on some personal their character and also their behavior in the society. So we in the initial period, we purposefully put a lot of time on this part, that selecting the members and giving them shares, because everybody is now owner. So they are having that responsibility. So we put a lot of effort during that phase. Then the second phase, now we have different farmer producer company as a shareholder. We have 48 farmer producer companies as a shareholder of our producer company. So the voting right is divided between this 48 producer company and 726 individuals. So that is actually giving confidence that this Sahyadri is not dependent on one person. There are multiple such capable persons through the 726 and 48 producer companies, their director boards, who can definitely run the organizations in further coming period also. And then the openness we kept from the beginning. I think that will give the continuous further leadership, and they will definitely work with the same mindset. So we are trying to build the same mindset.
Mr. Shinde, it was good talking to you. Thank you very much.